Welcome back. Markets are rallying this morning. Take a look. Dow Industrial's up 176. The S&P up 33, about 0.5%, and the Nasdaq's up 163, 0.2%. In fact, the S&P 500 on track for its best September in more than a decade. President Trump, meanwhile, holding a high-stakes meeting this afternoon with congressional leadership, with just one day away from a potential government shutdown on Tuesday night when the government runs out of money. And then on Wednesday, new tariffs kick in on heavy trucks, patented drugs, and other items. Economists are warning this potential shutdown could cost the economy about $7 billion a week. It could delay September payrolls and other key economic data. The payrolls number is out this Friday. Joining me now is the Bear Traps Report founder and New York Times bestselling author, Larry McDonald. Larry, good to see you. Thank you so much for being here. Give us your take on markets today. You speak with so many institutions all day long, every day, and know where the flow is. What are you seeing, Larry?
Well, Maria, I was a trader at Lehman Brothers, and we wrote a New York Times bestseller about the failure. And I've only warned once on the show about a crash in the banking system. That was in February 2023. And it's a historical fact that like 3 weeks later, the Silicon Valley Bank blew up. And I'm seeing the same things today. The banking system is so leveraged to MBS defaults, delinquencies are picking up, subprime delinquencies are picking up, buy now, pay later names are acting poorly, auto loan companies are going bankrupt. I think that the financials are really at risk here, the most since 2008.
So are you expecting some kind of a broad-based sell-off to come over the near term, led by the banks?
Yeah, remember, we've been extremely bullish on platinum, palladium, hard assets. Our book, How to Listen to Markets Speak, has been a top seller on Amazon all year. But at the end of the day, what's happening is I think that we've got to the point where lending is so aggressive that if you can fog a mirror, you can get a loan. And at some point, people forget, New Century filed bankruptcy. This is the biggest subprime lender in the United States in 2007, while the economy was at full employment. So, yeah, we've reached a point where there's too much lending to too many bad actors. And at the end of the day, consumer confidence is below September 2008 levels, below.
Well,
because of interest rates and inflation.
Well, tell me about that, because yields this morning are coming down. And, of course, we've got a big week of data. We've got the August JOLTS report out tomorrow, the September ADP number out on Wednesday, jobless claims on Thursday, and then the September jobs report out of the Labor Department out on Friday, Larry. And the yield on the 10-year right now at 4.15% is down 1.7 basis points. So what is the catalyst for this sell-off that you're expecting?
Well, it's month-end, quarter-end. Always remember. And there's a lot of window dressing. JP Morgan has a large fund out there that's getting bigger and bigger and bigger. The window dressing on month-end is large. But if you look at the effective Fed funds rate, we traded through the band, and that's highly unusual. And so if you look at tertiary names, versus established. Look at, say, Solana versus Bitcoin, down 25% in a very short period of time in the last couple of weeks. If you look at Oklo, a lot of the high flyers, Palantir, they are great measures of liquidity. And I think what's happening is at the month-end, quarter-end, with banks, bank reserves, and a lot of complicated things behind the scenes, I think liquidity is kind of not crashing, but coming down hard. And as you move to the new quarter, that what we call that month-end markup goes over, and then there's a liquidity issue, and that's where the first couple of weeks of October could be pretty nasty.
So what do you want to do? I mean, U.S. gold reserves hit a $1 trillion in value after the record rally that we've seen. Now gold topping $3,800 mark for the first time. Investors spurred on by the shutdown potential, more bets on upcoming rate cuts. Gold now up about 1%. Oil, meanwhile, pulling back as OPEC Plus is considering another increase in output at the November meeting. They are talking about that Sunday. Larry, your thoughts on commodities here?
Well, we've done a great job. In our bear traps report, we have doubled the S&P return this year. We're really doing well, but we're taking down exposure to gold miners, silver miners that are pretty crazy up here in terms of, not historically, if you look back to the 80s, but in terms of the percentages above the 200-day moving average. But we've been buying some of the natural gas names, some of the coal names, the Weatherfords of the world on the offshore drilling side. I think President Trump wants an extra 2 million barrels a day. So I think what we're seeing is in a commodity bull market, it starts off with the mothership, gold. It moves into gold miners, silver miners, platinum, palladium. The next stage should be agriculture, mosaic, commodities that are more exposed to agriculture, coal, and then we get that whole copper move that's starting to develop. And so we see a massive broadening out because at the end of the day, the deficit is so large, they're trying to keep interest rates below the rate of inflation. That's financial repression. That's the only way you get rid of a $38 trillion debt hole. It's very bullish for commodities, but I'd be taking down the high beta stuff right now.
So is that where to hide in a sell-off? I mean, if you're right and we get something serious in terms of a sell-off led by the financials, is there anywhere to hide in that environment?
Well, if it's really systemic like Lehman, there's nowhere to hide. But what'll happen is it forces the Fed to ease more aggressively, and then after a little bit of pain, commodities really start to move because that dollar is weaker. But remember, you still have the artificial intelligence $2 trillion build-out. The amount of natural gas and coal that you're going to need to power artificial intelligence is so bullish for these names. And these companies are trading, the natural gas names, Maria, are trading at 10 to 15% free cash flow yields.
Wow.
Really valuable. Look at the FCG ETF.
All right, we will do that. We'll look at it all. Larry, great to see you as always. Thanks so much for your amazing insight. Larry McDonald joining us.
Thanks,
we'll see you soon.